Hi, welcome to our panel this afternoon. Before we proceed, I'd just like to encourage our delegates to please use the panel on the side for discussion points and questions and answers. And if any of you are having problems, please use the help desk icon on the left-hand side of your screen. I'd just like to introduce our panel this afternoon. Justin Analgi is the Managing Director, Middle East and Africa of Cisco. John Kane, I don't see him with us today. Abigail Komu Okonji is the Digital and Financial Inclusion Specialist and Board Member of African Women in Fintech and Payments. Frederick Rappo is the Chief Information Officer and Head of IT, Data and Analytics, and Project Management at Momentum Investments. There I see John now. John is the Chief Information Innovation Officer at Time Bank. Fiona Umulisa is the Country Manager of Farm Crowdy in Rwanda. Welcome to all of our expert panelists. Wonderful to have you. Before we get started, I'd like to start with an icebreaker from Cisco, who is the panel sponsor this afternoon. So over to Cisco.
Thank you very much for that, Moira. Just a brief history around Kasisto. We were founded in 2013, actually spun off out of SRI, the Stanford Research Institute, on the back of a collaboration between SRI and the Spanish banking conglomerate, BBVA. So if you think of the banking smarts of BBVA tightly coupled with the data science knowledge of SRI, that's how we were founded. And if you know anything about SRI, they were responsible for creating Siri Inc. Prior to that being sold off to Apple. So we're a New York-based startup really focused on building intelligent digital assistants for financial services, consumer banking, business banking, and wealth management. Yeah, I'm looking forward to participating in today's session. So over to you, Moira.
Thank you very much, Dustin. It sounds like you really are a leading player in the financial industry with conversational artificial intelligence technology. So maybe in your view, you can share your view, as FinTech in 2021 advances, how will trade automation, trade performance analytics, artificial intelligence, and machine learning impact trading professionals?
The conundrum of the quant, as they say. Yes. This is an interesting one. I think, most people would be fearful in this space if you think about it. I mean, if you think of this recent success of Medallion, which is the global fund managed by Renaissance, I think it's probably the best performing fund to date in the history of funds. And that's, done without any human beings. That's all quant driven. So as a trading professional in that space, you'd be concerned. However, the future is augmented. And that's kind of key. AI can be leveraged to assist the traders in the space, and really by actually funneling customer interactions and really increasing the quality of the service that's actually offered. And that's kind of key. I think essentially, AI will highlight market trends to traders and look at the advice that they should be taking to their customers, and also the advice that they should be taking and applying to the funds that they manage. So I think the key thing here is really using AI to increase the quality of engagement with customers and clients, and AI being the real enabler, I think, in this space. I mean, we've seen it with our production deployments in Australia with Westpac, specifically in this space, that AI can really complement, what traders are actually doing. So, that's kind of key. It's augmented. I don't think they need to fear anything at this point in time. Yeah.
Thanks, Justin. Just on a follow-up question, what do you believe the benefits of using AI-based financial management solutions are?
So I think there are usually key things, three key things at least. The first is usually the servicing element. So So using AI to address the mundane servicing requests of customers. So really the 80% of what customers ask in a particular channel. How do you get AI to address that without a human in the loop? That's really where most business cases start. They look at the cost of servicing. How do we reduce those costs using AI? So that's the first point. So servicing, absolutely critical. The second piece is the acquisition piece. How do you actually acquire new clients in their channel of choice at the point where they're actually warm and they're ready to actually engage? Get them converted at the point where they're interested in a particular product. So there's that acquisition piece, and there's obviously a cross-sell element to that too. How do you engage new clients to sell additional products through to them? And then the last, probably most important, is the engagement piece. How do financial services organizations create a differentiated service to their customers to keep them relevant in the market? And that's kind of unique. I think if you think of, what Easy Equities has done for trading in South Africa, for instance, in particular, they've completely revolutionized that. They've put, US stocks in the hands of everyday consumers out there. It's profound. And you can only look at their growth on the JSE and see the results for yourself. And it's completely expanding. It's gone from, local SA stocks, US based stocks. They've recently added Australian stocks to that. There's retirement annuities, there's property investments. I'm sure crypto's on the horizon at some point, but that's quite an impressive piece, just in terms of actually not only servicing clients, but allowing them to actually trade and dabble with portfolios. So so I would say probably those three key areas: servicing, acquisition, and engagement.
Thank you, Justin. I'm going to pivot to Frederick now, and maybe if you could share your view on what, in your view, is the new normal in the financial services sector in the COVID-19 age.
Yes, thank you, Moira. I think in the COVID-19 age, I think everything gets redefined. I think that there's new normals every day, and we really have to find new ways of doing business. I think in our world where things are changing, we have to be able to adapt the whole time to new opportunities. Yet there's continuous regulation. There's so many things protecting us on the one side, but the other side, I think as we get more commoditized, we need to make sure we can also differentiate ourselves. So I think all of these technologies and the impact of COVID on financial service, I think is really forcing us to rethink as businesses, to really say, how are we staying relevant and competitive in the industry out there?
Yeah. Thank you so much, Frederick. Fiona, our first lady panelist, what do you think? What are some of the challenges that banks and financial services institutions face when implementing a digital transformation strategy? And then following up from that, what do you think the banks and financial institutions can do to overcome those challenges?
Thank you, Mara. It was cutting. I don't know if I got your question so well, but I think you're asking the challenges the banks and financial institutions are facing in this emerging technology era, correct?
Yes.
Thank you. So I would say emerging technologies in the financial services are consistently disrupting how consumers interact with their money and what they expect from financial institutions, And I would say, for example, at Farm Crowdy, we are in the most risk sector to traditional financial institutions, which is agriculture, And what we do is that we provide different services, and in our financial portfolio, we do provide digital lending loans to SMEs in agriculture and farmers, to be specific. And to do that is that we need to really understand both structured and unstructured data to determine the services you need from us. And I think what challenges banks and financial institutions have been facing is that we have one shoe fits all, And when it comes to agriculture, for example, if you do plant cereals, you deserve a different rate to someone who's doing horticulture, because seasons are different, harvest is different. So to us, we go deep on the ground to understand the consumer's lifestyle so that we can determine and we can help you determine what you deserve from us, And recently I realized that most of our consumers wake up at 4 a.m. They are farmers, so they wake up at 4 a.m. So if one wakes up at 4 a.m. and makes a loan request, let's say at 5 a.m., and as a banker or as a financial institution, you approve the loan at 8 a.m., you can imagine how much in terms of money, but also fees, the borrower is losing on, So the speed, the consumers are really demanding speed. So it's our mandate at Farm Crowdy, and also I think for all the financial institutions in the ecosystem to work with the speed the consumer is looking at too. Secondly, I would talk about, I would say something about instant payments, So instant payments, because we shouldn't, I think it has always been an issue in our ecosystem when it comes to distribution. So acquiring or requesting a borrower to come to the branch, meeting an agent, those back and forth. And imagine how much time plus the fees in terms of transportation a borrower loses while going to pay, to use his own money or to pay the service. So to us, everything is on the mobile phone, given that there's the penetration of it is really high. So we leverage on that. And in conclusion, Maura, I would say the demand is, we are doing all this because the demand is really pushing for customer experience and personalization, So personalization to me is important because the consumers expect that we have a lot of data for them. So we should even recommend them which services they should be taking on, rather than them coming to us asking, I want, let's say, for example, a loan of $200. I would recommend you that you should take $300 or $100 given to your lifestyle. So that's what I would say. The challenge is that the speed the consumer is requesting us to move on, we are still, running behind a bit. And that's what Farm Crowd is here to really solve.
Okay. John, in your view, do you think that we have reached innovation saturation in the sector?
I certainly don't think we've. Thank you, Moira. It's a good question, but I certainly don't think we've reached innovation saturation. I think we've seen a huge growth in innovation, in digitizing our interaction with customers and doing away with some legacy systems, branches, moving a lot of the customer focus onto a handset, and that's been great. I do think there is some saturation in that space, and we really need to move away from the digital screen experience and moving the cost center to the customer from the physical interaction, and focus on some of the things Justin was talking about with Easy Equities. What they do themselves at Kazisto is focus on digitalization of customer education and getting much greater depth of customer adoption of financial services. I think another space that there's so much of space to play in that has to be attended to at the moment is we still haven't seen an enormous amount of innovation in operations and back offices of financial services companies. We still have very large cost structures, and even if you look at the fintech, a lot of fintechs, they're not necessarily profitable, and the reason for a lot of that is the cost structure. We've dealt with a lot of the customer innovation and digitization and automation, but what we haven't yet seen is the depth of innovation that will come in that back office, the middle office, that will make all of these profitable. And banks, as well as fintechs, will be under huge pressure here as time goes by. So I do think there's lots of space for innovation. It's just the focus of where it will change dramatically.
Thank you. Abigail, what, in your opinion, is the outlook for fintech in Africa?
Thank you, Moira, for the question. So For me, when I look at financial services, of financial technology or fintech, I think about democratization. I think about access to financial services that either the unbanked, underbanked, or even the banked have been missing for quite a long time. And I am aware that Africa has 54 countries, and there are differences, of course, within each of those countries. But generally speaking, if you look at financial or fintech in Africa, the services have been skewed towards remittances, payments, and lending. However, there are other sectors that could benefit from financial technology, and I think Justin has alluded to one of them, which is investments and wealth management. We haven't seen a lot of innovation around there. I know of one organization called Ndovu that's now trying to say you can invest in your country as well as internationally. But, the process of investment is still very, I would say, manual. I would also say there's a lot of opportunity in savings. We often talk about, saving for a rainy day, or you're one event away from poverty if you don't think about like really where to invest money and where to put money away. And so there's also opportunity there. And I think insurance is another one. So if you look at insurance, I don't know about many other countries, but I know within the East Africa region, we still have a long way to go when it comes to accessing insurance services digitally. A lot of the processes, and I think it speaks to what John said, are still very manual. It's basically a headache for you to be able to, approach an insurance company and, get whatever service it is that you had previously paid for or invested in, right? And funding, I think is the last one I would say here, but specifically for SMEs and for startups. When we go the crowdfunding way, there's a lot of opportunity for us, Africans to be able to invest in our own businesses, and even businesses internationally. So to become basically investors across different sectors. And so, of course, there are things that need to happen. There are rails that need to be laid for, for these types of services to be available, so anyone can access these services anywhere at any time. And I think for Africa, a lot of these services need to be delivered digitally and specifically through a mobile phone, which is where many people have, regardless of whether you have a smartphone or a basic feature phone, right? Because that's where we are headed. That's where the infrastructure at least exists in many of these countries. And if we want true digital and financial inclusion, this is where we need to do a lot of investment. The final maybe thing I would mention is that there needs to be support in terms of the relevant regulations that are there for consumer protection. Now that our data is everywhere, how do we safeguard ourselves as individuals, and what roles do the different financial the regulatory bodies, whether they are financial or the telecommunications entities, what role do they play in ensuring that our data that is with these different entities around the world is safe, and even knowing we are moving towards digital currencies, cryptocurrencies, stablecoins, etc. And especially as Africa. And we, now that these ways of paying are there, and we are an interconnected society, we don't exist on our own. How do we leverage this? How do we protect ourselves so that even if we are transacting amongst each other with the rest of the world, what can fintechs do to ensure that these services are available to us? We are able to utilize them, and we basically are able to access financial services anywhere and eat it anytime. So that's basically what I would say.
Thank you, Abigail. Frederick, what do you think emerging technologies really means for the financial services sector and industry?
Maura, I think a few things. I think we know it will disrupt and it will start impacting all areas of business. I think it's
Yes.
really, yeah, so that's the one thing. So no matter if in operations or finance or product development, risk management, it's just to name a few, I think it will impact all areas of business. I think it is and it will continue to force us as business to think differently, to really remain relative and competitive in the future. But I think the really big thing is for us, it will open up new opportunities to differentiate ourselves, really around
Yeah.
new value propositions, new customized service experiences, new tailor-made products and offerings. With all this data and insights and processing power, I think the opportunities are really endless. Yeah, I think business will start crossing traditional boundaries and domains. Yeah, I think it will really change the world we actually know today. I think it will bring its own set of challenges, but I think, like we always say, a challenge equals opportunity. So, yeah, and maybe my last thing, I think the big thing is for me around culture shifts. I think these emerging technologies will force us to think differently, to embrace the technologies, but it will also force us to change, to make sure we can attract the right skills and the right partners to really leverage the opportunities that exist in the financial services space.
Thank you. I think I lost you for a second. So thank you very much, Frederick. John, going on from the culture that Frederick was alluding to, in your view, the importance of agility, culture, and talent in the bank. How do you rank that? What are your thoughts? What pointers you have for us?
I'm hoping I'm still connected and you can hear me. I seem to have lost a bit of sound connectivity, which is great. So no issue there. Just in terms of those three things, and I think there's been a lot spoken about agility and agile methodology and over the last few years. But it's wonderful to talk about those, but realistically, the most important one is, especially now, and I think if people working from home and COVID has taught us anything, is culture. The impact on culture on the products we produce and how those impact the lives of the people that we produce those for can't be underestimated. So if you have great culture, a great culture which focuses on dealing with and solving for customers' problems, not creating the most innovative product or the best product for us or the one that we think is, but really dealing with the customer problems our customers face on a day-to-day basis and what they need. Naturally, if you have good talent and great culture, agility follows. We're able to work independently. We focus on what's important, and we become more efficient. And I'm sure, as all of you have experienced this year, if you have good culture, you can work independently and come together and produce great outcomes. If your culture is great and people work independently and they focus on what's of interest to them rather than that culture of servicing customers, you diverge in what you produce. So where we are today, more than ever, culture is probably the most important thing, and certainly for the future of financial services, having great culture results in great products that reflect the culture and place in which our customers are today, not just where we'd ideally want them to be.
Thanks, John. And finally, Justin, maybe you can just, in your view, let us know, what do you think, how has COVID-19 redrawn the fintech map?
Yeah, it's been an interesting one for us. I mean, we've got quite a good use case and experience, at least with ABSA in the space. And it's available information if you want to get a view around that. But when the pandemic hit, they had launched a number of virtual assistants in a number of different markets that they inherited from Barclays, and the timing was perfect. Essentially for them, as they saw that demand of calls coming through, they had a channel available. This was deployed in WhatsApp that really could service their customers. And what we've seen in the number of banks that we've been working with is the volume and the demand on call centers has essentially not only incrementally grown, in some cases it's gone through the roof. And having AI service those customers, it's no longer a possible need from a strategy perspective. It's an absolute must-have in your strategy. And how do you deal with those ever growing customer demands? The only way you can do that is to scale your usage of AI in that space in terms of servicing those customers. So I think COVID-19 really highlighted that. Some organizations were prepared for it, be it accidentally on purpose, but and others weren't, and you'll see that change in the landscape in the next couple of months to come. So yeah, I think it had a massive impact, on everybody's digital transformation strategy. Good.
It's just been such a privilege having this little bit of time with you. So thank you very much, Abigail. Thank you, Justin. Thank you, Frederick. Thank you, John. Thank you, Fiona. I think it's been a quick fire, really informative session, and I thank you so much for the participation. Thank you.